What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is August 2nd of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to focus in on yesterday's topic, the discussions around the Federal Reserve rate cut, the first that we've seen in 10 years. And in today's video, focus in on how that has impacted a variety of different markets, from cryptocurrencies to stocks, as well as precious metals such as gold and silver. And outside of that, we've got a few other topics to discuss, but more predominantly towards the end of the video, we've got a sponsored review of the platform and cryptocurrency Serenium. So I recommend you guys stay around for that. It's definitely going to be interesting. Now, to start off, let's go ahead and take a look across the board for cryptocurrencies. As we can see, most cryptocurrencies are in neutral territory still at the moment, between 1 to 2% to the upside or downside. However, out of the few players that are outpacing Bitcoin here, which has been on a pretty decent tear here over the last 24 hours, two of the players that I spot right here are some of our top 10 picks. We've got Ren, the top performer right now in the top 100, up 27%, getting huge volume coming through Binance. And along with that, Energy as well, up 15% as well. So it's good to see these two players doing well. And outside of this as well, we've got a decent range of altcoins still in the green, but not many outpacing Bitcoin at the moment, giving Bitcoin dominance a nice leap here. Again, claiming most of the market cap that we've seen. So again, as we talked about in the previous episode or two, I wanted to see Bitcoin market cap get above this range here. So we're still a few $billions away from it. Not to mention, I'd like to see a daily close. But again, we're getting very, very close here to passing the previous highs. Now, why is this important? Again, just to signify, just in case if you guys missed it or might have forgot, you want to see, as to guarantee that you're getting out of correction territory, you want to see a rate of higher lows and higher highs. I don't know why those are so difficult for me to say, but you need to see higher lows, which we've seen so far. We placed a low here on market cap around a little bit under 250 billion. Then we set a higher one here around 260 billion. And then we also had a higher level here at 288. And it'd be a question of whether or not we can get above to say 290, 295 billion, get a close on it, and then continue the trend from there on out. That's a sign of a reversal. It shows that buyers are coming in at these lower levels and the rallies are riding to higher levels, right? It shows that there's more buy side demand coming in and that there might be a reversal of trend. Whereas when there's a correction, you have lower highs, as we saw here, and lower lows. So just wanted to make that very clear. Now, in the sense of market dominance, we can see we've got a big jolt up here over the last few days, guys, in the sense of Bitcoin regaining dominance. Looks like we're well on our way to revisiting back to the highs. Again, I'm eager for altcoins to make a move, guys, but I still haven't fully averaged in. And along with that, I'm waiting for this to possibly set a third higher level. So we have, for example, the high here. The high here, we might be going for a third one, or let's see what happens when we retest this high here. As we talked about when we took a look at the chart for Bitcoin dominance a few episodes ago, we had definitely broken out of the kind of exponential trend. Whether or not we can continue to climb from there is going to be, I feel, a little bit difficult in that case, as we've seen with Bitcoin, for example, in the past. When Bitcoin broke one of its more exponential trends, that's when we broke off of the end of the cycle at 13,000 in this case for the correction. So, and we'll have to see. I don't want to doubt Bitcoin because it has been the winner this year, but we'll have to take a deeper look. Now, we will be taking a look at Bitcoin's price in a bit. I just want to go ahead and talk through the news because we're going to be taking a look at price altogether. Wanted to mention, guys, that Brave, you can now tip people on Twitter with the Brave's basic attention token. So this is really exciting stuff. Without just going through the article, guys, I'll show you. You can basically have all the tweets that you normally see. I've got, for example, Moena, who's one of our friends in the Netherlands in the crypto space. Her and Teddy are some of my good friends that I met out there. And she posts a lot of great TA. She's a very active trader in the space and also communicates very frequently with a lot of crypto Twitter. And you can see here, there's a little tip icon down here that you can give to other individuals. We could also give a great tip to our great president, Donald J. Trump. Very deserving. He needs the tip. No, I'm just kidding. It doesn't. You also have people, I've got like Bob Lucas, for example, another person who I really respect, takes a long picture view of the macro cycle. And it's cool. You can just simply click tip on them and you can give them that. Now, in some cases, if they're not a verified publisher, as of yet, I think you can still tip them, but they're going to have to claim it at a later date in this case. Like they're going to have to eventually set up the thing before they can actually get or receive the tips. So you might want to check, as you can see with any case, and make sure that they're a verified publisher. And you can always do that by clicking the icon here in the browser. Anything on the mobile, it's quite similar in that case. There's an easy way to tell. But this is really great news, guys. I think it's awesome how they're continuing to spread this. This is why it's one of my top 10 projects. I thought I'd just share it with you guys, not trying to shill it. I just think it's really cool news, and I think it's going to help support a lot of people who make their careers online, creating entertainment, creating education, things of that sort. All right, so Next up, another positive news, a set of positive news for cryptocurrencies. Square, created by Jack Dorsey, who again, I've got my negative things to say about Jack Dorsey sometimes, but I have to say I do appreciate his pro-Bitcoin stance. I think this kind of speaks to a good-hearted nature of Jack in this case, that he wants to support the adoption of a censorship-resistant currency, kind of opposite of how his platform is. But I will say this, you know, they have had some really solid Bitcoin sales on the platform. Now, that's not through their Square platform solely. They also own an app known as Cash, okay? So the Cash App, from my understanding, I think is a subsidiary of Square. If it isn't, it's owned by Jack Dorsey. And basically, this application has seen over $100 million in the last quarter of Bitcoin purchases on the Cash App. So they've done a really good job marketing it. They did a lot of like really big Twitter campaigns, things of that sort that I saw. They gained a lot of traction, but they've been able to provide an outlet for people to get access to Bitcoin. Now, some people would say this is really good. I think it's a great thing on the surface. Some people also complain that they don't, you know, allow people on the Cash App to buy other types of cryptocurrencies. And this is coming from Jack's like personal opinion. He's like, he thinks everything outside of Bitcoin is like unproven. It's not really at the point where it's like worthy of, you know, marketing out to people. And I can kind of see, I understand in some sense that Bitcoin maximalism, but at the same time, I wish that they would offer more opportunities, in that case, to different cryptocurrencies. But nonetheless, they're not only seeing huge traffic through the Cash App, they're seeing it through the Square app as well. They're seeing actual sales coming through where people are paying with Bitcoin. So it's quite interesting. I think it's an interesting thing. I think that they've been accepting it for about 1.5 to 2 years now through the Square app. So I think it's really good that they were not only an early adopter of cryptocurrencies, but they've actually seen the benefit. It's bringing in a lot of revenue in this case, and probably a lot of users to the Square platform, making it stand out from other competitors. Again, I think it's awesome. It's a sign that the free market is at play here in the sense of payment processors supporting cryptocurrencies. And I have to say, hats off to Jack Dorsey for being such an early supporter of Bitcoin and other things. I would only say, if only he could be as supportive of censorship resistance on his own platform as he is for cryptocurrencies. All right, well, at least he understands that money is the most important thing. You shouldn't have anything but censorship resistant money. I'm just giving him crap. But anyways, want to spend some time to focus in on traditional markets, guys. Now, as we start to take a look at the charts and talk about how yesterday's decision impacted the markets, I want to talk about something as well that a lot of people might not know about, and that is the inverted yield curve. So the inverted yield curve is a very significant thing. It's a phenomenon that happens usually towards market peaks when I think more than anything, there is a dramatic split from fundamentals. And that is where, for example, the yield that you get for a, for example, 3-month treasury, in this case 3-month bond, whatever it may be, is the same rate that you would get for a 10-year. Now, that wouldn't make much sense, right? You would think that if I'm giving up my capital for a short period of time, I should be getting a lower rate. And then if I'm giving it to you for 10 years, I should probably get a higher rate, because I'm giving my, maybe for example, my life savings to you for 10 years, right? Well, that's the yield curve in this case, right? Where you have basically a long, sorry, I guess in your guys' perspective, I would say it would look like this. So basically you have the lower time periods, lower rates, and it increases over time as you have longer term treasuries or forms of debt. Well, the inverted yield curve is when you're actually getting an equal amount or more for shorter term loans. Doesn't make much sense, right? Well, it's a phenomenon that happens sometimes. And in this chart here, this is a chart that's put together by a guy named OddStats on Twitter. And take a look at this here. This is a highlight. Any of the highlights on this S&P 500 chart, it's a logarithmic chart over time. You can see this is during the dot-com bubble and right before 2008. Every time since 1982 where the 10-year to the 3-month yield curve was inverted for at least 30 straight trading days. We finally hit that inversion. And it's not to say, and this is why I always talk about, guys, I'm never going to be that person who tells you guys, and I know some of you out there are like this, I'm not giving you a hard time, but there's so many people for the last decade who have been, oh my gosh, recession tomorrow, we're going to have an absolute crash and the whole world's going to go to chaos. It doesn't happen that quick. It's probably not going to be as dramatic as many of us assume, but it is realistic at this point in time. Ever since 2018, in my opinion, that's when I flipped. I was an absolute perma bull during the environment that pushed up the equities market. But when the fundamentals change, when the yield curve inverts, it gives us these signs. History tells us that it can happen very quick or it's right around the corner, right? So, I mean, with the kind of shakiness and price action we've had over the last few years, I think it's given us a clear sign that we're getting towards the end of the cycle. But again, if the Fed keeps cutting rates at a dramatic rate, then we could get Nasdaq 10,000 and things of that sort. But I think that's going to be where we top out, double the level of the dot-com bubble, and then I think we could start to experience a pretty severe recession. Now, talking about corrections and interest rate cuts, the Federal Reserve did exactly what markets wanted to see yesterday. They cut interest rates. Everyone was expecting this for the most part. What the Fed didn't do yesterday, or sorry, I guess it wasn't technically yesterday, it was the day before. What the Fed didn't do is cut rates multiple times. So we talked about this kind of catch-22 that the Fed is in, trying to make sure to fend off the strength of the dollar versus other currencies, cater to equity markets. You know, there's so many problems going on right now, guys. And it's also not just for the United States, it's tied to the global markets as well. And the stability of the Eurozone and the Japanese, the Bank of Japan, things of that sort. But, you know, whereas a lot of people were confident yesterday, if we took a look at the Nasdaq, the second trading day here after the markets closed here on the 31st, the first day of August actually looked quite positive at first. It looked like we were going to come back up, closing the gains. We thought the market might have overreacted and was going to blow it to all new highs, but no, it turned back over. And we sold off quite dramatically. And the problem that I see here, guys, when I take a look at this chart, I don't need any indicators. I'll turn off all my drawings here. This looks like we're topping out again. This looks terrible. You cut rates and it doesn't satisfy markets, because the market was expecting that we are going to be on a track back down to an interest rate of anywhere between 1% to 0% in the next 2 years. The markets need that. That's how weak and fragile, equity markets are, and not to mention the underlying economy. People, again, as I've talked about, this is not just something with equities. Interest rates apply to the cost of capital and credit. People aren't taking as many mortgages out as the market, as the Fed, I think, and most economists had predicted at this rate range. And it makes sense. We've had lowering peaks in rates as well over the last few decades. So, again, I don't mean to ramble on that. I guess we already talked enough about it, guys. If you guys want to see that video, you should watch yesterday's video if you haven't seen it. But in today's video, I want to talk about what it's done on markets. Well, we can obviously see we're starting to see another top in equities here. What I want to look for here, as with most people, I usually like to look at trend lines, right? Be looking at this range. I'm actually going to get rid of my drawings here just to make it a little bit clearer. But let's see here real quick. What I want to look for here, as I talked about with my group for my newsletter, is hopefully, if we're hoping for equities to go higher than Nasdaq 10,000, the low would be set down here around 7,800. If we broke that, and more specifically, if we broke down past the previous low here at 7,200, that would spell very bad news. That would be a signal that the Fed made a very wrong move. Okay. Now, to focus on what you guys probably care about most, and that is Bitcoin. Well, Bitcoin has been taking it quite positively. Now, volume hasn't been insane, give it that. And I wouldn't say that, for example, this is the only reason Bitcoin is up. But if we take a look at the hourly, very nice uptrend since here on July 31st, since the Fed meeting. I think people, again, are starting to realize that this can be a hedge, guys. And it will be a hedge going into the next year or two. Whether or not that will be a very stable hedge, I wouldn't say that. It's going to be very volatile and bounce around, but I think it's going to be on a general sense on an uptrend. And on this 4 hour, guys, with the hiring lows here and potentially higher highs, a potential breakout here above 11,000 over the next day or two, I think that the correction's over. I wish it wasn't, because I'd love to average in more, but I've got my positions, I've stacked in a decent amount, and I didn't get greedy. I didn't wait for 3K, I didn't wait for 4K. I'm not meaning that, sorry, if you guys have those kind of positions in mind, that's fine. I know everyone's got a different opinion, but I have to say, guys, it's unlikely. It's really unlikely. I don't see this. You know, some people were talking about the theory of this being a B wave. I don't see it. Not with the macro environment we have right now. It's just not practical, in my opinion, for that to happen. And we haven't seen that historically like this for Bitcoin. It moves in very cyclical patterns, and it seems like we've started that cycle. Now, I want to talk about something else that I don't always talk about, but I will be talking about a lot more because the market is trending. and that is gold and silver. Now, the reason I say that, it was what I said earlier, is because for the last few years, on a fundamental sense, I've been bullish on commodities, but I haven't actually gone long them because I knew that the environment wasn't for them. There was QE, there was lower interest rates, assets win in that kind of environment. Well, now we're reversing those trends. We're finding the Fed and other central banks are trying to balance into a normalization of monetary policy. And we can see here, even as they've cut interest rates, gold is doing great. It's the best performing, not only one of the best performing assets this year, outpacing most indices in the stock market, but along with that, take a look at the gold miners ETF. Big pullback the other day, came back even stronger. The fact of the matter is here, guys, is that gold and silver are going to be huge plays this coming year. I personally am more bullish on cryptocurrencies like Bitcoin, but I do believe if you're taking a look at stocks, take a look at the gold miners. For example, one of our gold miners, Eldorado Gold Corp, this is one of our topics we talked about in the newsletter, popped up this morning off of earnings. In this case, it's up 7 or 8%. So again, I'm looking at people who are in the space of producing these commodities, who are extracting it, selling on the open market. It's a part, just to kind of show you some kind of perspective. A lot of these miners, they're dirt cheap. And many markets that retrace 80 to 90% don't ever come back. Gold and silver, it's one of the few exceptions. Precious metals, if they go up in value, if you get into a panicky scenario and you got gold players like this, it's going to be one to watch. I'm not saying ego specifically. You can take a look at different companies, look at the fundamentals, read for yourselves, guys. But I like taking a look at the miners when these cycles come. Again, we don't get these opportunities that often. If you held any of these miners for the last few years, you lost big time. But when you see volume like this, record-breaking volume, 3 consistent months of green price action, that's what gets me excited. That's a trend reversal, right? That's when you're starting to see a shift here. You can see it very clearly on the logarithmic chart. So just wanted to press that, guys. Hope you guys enjoyed the video today. Again, the major thing I'm watching for is an outflow of capital out of equities as we continue to see the Fed either cutting rates or increasing rates. Doesn't really matter. They're at a point where I think, again, the benefits of holding equities at this point, in my opinion, are outweighed by the risks. In this case, I believe that there's much more potential upside in gold, silver, and Bitcoin, as well as other cryptocurrencies, than holding any kind of stocks, right? That's just not my game anymore. I'm done with it for now. And in the future, when we do get a correction of some sort, if we get a 40 to 50% correction, even if we go to Nasdaq 10,000, it's going to bring us down to this range. I'll buy at 5,000 on the Nasdaq. That'll be fair for me. And I'll buy as many stocks as I'd like in different indices as well. So we'll be patient and we'll wait for the cycle to come down, provide that correction for us. But until the next video, guys, thank you all so much for watching. If you have anything to say, guys, on the topics we discussed, leave a comment down below in the comment section. I'd love to hear from you guys, get a discussion going. So without further ado, let's go ahead and spend some time to focus in on today's sponsor, Serenium. Alrighty, everyone. So let's go ahead and spend some time to focus in on today's sponsor, and that is no other than Serenium. Now, before we dive into what Serenium is all about, I think it's very important to make something clear from the get-go, especially for those of you who are hearing about it for the first time, and that is that Serenium is not an IEO or an ICO. In fact, it's an initially airdropped ERC20 token on the Ethereum blockchain that's built to be an interest-bearing cryptocurrency for gamers. Now, this is a very unique proposition, and we're not only going to be talking about the token metrics, the interest mechanisms on the currency as we go throughout the video, but also the solid foundation that Serenium has with a wide range of different developers and teams that have a wide reach and audience throughout their video games. And this is going to help provide a really nice foundation for a new upcoming currency like Serenium. And then we'll also talk towards the end as to how you'll be able to get some free Serenium if you've been staking other cryptocurrencies. So without further ado, let's go ahead and dive into it, guys. We've got lots to talk about. So taking a look here on the website, as we talked about, Serenium is focused on being a currency for gamers. But not just that, it's actually going about trying to create what's known as a cryptographic certificate of interest, a CCOI. And this is basically a more unique way of doing proof of stake. As we know, most proof of stake coins just give you kind of a annual interest rate, and Serenium does offer this, but it does take a lot more complicated measures in the sense of how it actually runs its token economy. So we'll go ahead and talk through some of this. We won't be able to dive through all of it, but we'll get kind of the gist of it. And if you guys ever need to find more information on it, you can go to serenium.com to learn a little bit more. Now, the first thing to take into account in order to kind of compare it to other proof-of-stake cryptocurrencies is that there's a 5% interest rate per year for staking the currency in this case. So if you're a general staker on an annual basis, you're going to earn a base 5% in this case for staking the currency. So again, one of the major key elements here in the sense of encouraging staking. But along with this, if we take a look at some of these other principles, the longer you stake, the more that you're actually going to earn in the sense of bonus. So this is something that, again, a lot of proof of stake coins don't do. And that's the fact that if you actually are able to stake the coin longer, in this case, you're going to be receiving a higher bonus. So we can see here, there's a minimum stake of 90 days, 3 months to qualify, 5% bonus after each 3 months in this case. So you're continuing to stack on, in this case, extra interest if you're able to hold the currency. Longer stakes give a 20% bonus multiplier per year of interest payouts. So again, every year in this case, you're stacking on more and more. It's something that compounds over time and really starts to build up your return in the network. A maximum 5-year stake gives 100% bonus. So at a 2.5-year stake, for example, if you're just staking it in your wallet for 2.5 years, it gives you a 50% bonus. So you can multiply the 5% times 1.5 equals 7.5% a year. So again, you've added on another 50% return on your staking return in this case, getting up to 7.5% versus the base 5%. So again, there are some new metrics that are involved here. The cool thing about it as well, as we talked about, this is a currency that you have to claim the initial supply. It's being airdropped in this case through those who have been previous holders of other cryptocurrencies. And they actually got rid of the Mt. Gox wallet. So pretty cool move on their part. I think that's a nice, simple move to do in this case. I think, it should be standard practice at this point, any kind of hacked funds. So it's good to see. And not to mention as well, there's ETH pool staking. So after you've claimed all your coins, you can earn more Serenium via ETH staking. So if you stake Ethereum in this case, then well, there you go. You got more Serenium in this case. So I think this is actually going to be a big boost for Ethereum as well. But in the sense of a lot of networks using ETH as a staking mechanism. And it's good to have ETH as well in order to send Serenium. But there's a little bit more details here in the sense of the early adopter bonuses. So this is irrelevancy in the sense of the first, this holds relevancy in the sense of the first 52 weeks. So there's a few things that I want to go over, but really it has to do with these key two things down here. Not only the referral bonus, so if you refer more people onto the network, you get more people involved in the Serenium ecosystem, show people the games that are available, and also how to stake Serenium in this case, or hold Serenium, you're able to get a referral bonus for whatever the referee claims. So when you guys go to claim the initial supply, you'll be able to probably get a referral link in this case that you can share with other individuals, and when they claim theirs, you'll be able to get some extra Serenium. Now, the Robinhood bonus is the really interesting thing that I want to talk about. And it's basically over time how there will be some individuals who will not claim their Serenium in this case. It's hard to get people to claim free crypto. I know it sounds crazy, but at the same time, the Robinhood graph basically demonstrates that over the next few weeks, there will be basically extraction from those who didn't claim their coins. It's going to be distributed amongst users in the network who have claimed their coins. So the earlier you get in, the better, because you're going to be getting the coins of other individuals who didn't claim. But at the same time as well, the reason why it's called the Robinhood graph in this case is that you're still not going to be exactly late to the party. If you come in the later parts of the month, the later months of the 52-week period, it's not the end of the world. You can still get some in this case. And you can see here the distribution in this case, the percentage of total coins that get distributed every month. So again, feel free to read through this, guys. Learn a little bit more about the penalties as well of staking if you guys are going to get involved in it. And again, the why of all this, in this case, why is it so important? Well, again, there needs to be a framework in this case that I think from the get-go wasn't an ICO and IEO and really came in as a trustless interest-bearing token. I really can see the benefit of this in the sense of Serenium compared to a lot of proof-of-stake cryptocurrencies. I like that it's built in the Ethereum network for the sense of security. I think as an ERC20 token that should be fine, and as scaling solutions come along, it can be used for payments. But I want to spend some time now that we understand a little bit about what Serenium is to talk about one of its key partners here, CryptRove. So as we can see, here's a partner of Serenium, and these are some of the initial games that are going to be launched. Now, to be fair with you guys, I have talked to the team. They're looking to get some demos out here relatively excuse me, relatively in the next few weeks. But at the moment, you know, what we have is really some kind of concepts that they're working on right now. There's TerraNova and King's Ascension. Now, TerraNova is a game in this case that's going to allow you to, it's a digital card collector game in this case, and you'll be able to actually have true ownership over your cards in this case. Now, I've seen, again, a lot of kind of card games over the last few years. I'm not a big player in the sense of myself personally, but I do have some friends who are really into digital collectibles. I had friends who are huge on Magic the Gathering. Ironically enough, a big thing that actually led to one of the largest crypto exchanges, Mt. Gox, Magic the Gathering online exchange. So again, there's a big tying roots here in the sense of the cryptocurrency ecosystem to card collection games, and not to mention as well all kinds of different card competing games. So not just collecting cards, but also being able to compete with them as well. So again, feel free to take a look through these projects, guys. TerraNova, I think, is going to be a definite gem to watch in the sense of their game. But they also have another thing that has to do with digital collectibles and in-game items, and that's King's Ascension, where you'll be able to craft custom items for your character in this case. And you can be tokenized, they can be tokenized, so you'll be able to build digital items that people will be able to exchange. Now, the one thing I'm curious about, again, you know, we're still working with kind of limited resources here. I really not only can't wait to see some gameplay for these, some demos of these projects in the works. The team sounded very confident that things were progressing along well and that they'd have some material in the future. But the major thing here is I want to see, you know, how these assets will be able to be utilized in the game, and not to mention as well, what's the customization process look like? I'm real eager to see that. And how Serenium kind of comes into play with all of this as well. Is it used as simply just a form of payment, or you know, for example, like networks like Engine, am I going to have to stake Serenium and I'll be able to do certain things? Will I be able to create in-game items with that? You know, is there a cost to it? But the other thing that I think is some really, really big news, guys, that really got me excited when I got to actually chat a little bit with the team about what they were up to, is that they landed a partnership with Blank Media Games. Now, if you guys haven't heard about Blank Media Games, I wouldn't blame you, but you've probably heard about one of their biggest titles, and that is Town of Salem. Now, this is a very, very big online game that a lot of people play. I remember when I was still back in school, the endless amounts of people who would be playing it on their laptops when they should have been studying. Well, Town of Salem is a really big game, and it's got an over 10 million user base that has played the game. And this is a big reason why Blank Media Games is a huge partner in this case. Now, what Serenium does is that they're aiming to help get a lot of these gamers in the ecosystem, and many of them might not be owning cryptocurrencies, and so it's not a problem. The initial supply is not only created through those who claim it through their previous holdings of other cryptos, but along with that, these companies that they partner with Serenium in the early days are going to get a large amount of the token supply. And they're going to airdrop it to a lot of users in the ecosystem. So again, getting people who have never touched crypto a little more acquainted with cryptocurrencies, which I think the more the merrier. I mean, if this could really get on millions of users, it's going to do much more than any ICO or most cryptocurrency projects out there that have been struggling and spending tens of millions of dollars in the process. I think this is really cool. And it seems like a lot of these gaming companies are really eager to get some exposure to the crypto space, or at least give it to their users. Now, again, guys, if you want to stake Serenium, if you want to get a hold on some Serenium, you don't have to really just go to the exchange to buy it. You guys can actually claim some of your Serenium if you were holding Bitcoin, Bitcoin Cash, Bitcoin SV, Ethereum, or Litecoin. So again, follow the instructions here. I'll have the link down below, guys. It's not that difficult. The key thing here is that you're going to be providing a signature. Now, this is not your private key. I want to make this very, very clear. You are going to be providing your signature, and they'll showcase how you actually can generate a signature that proves that you're the owner of those cryptocurrencies, right? That's the major thing here, is that you aren't going to be providing your private key in this case. Do not put that in the signature message here. Follow the instructions as it tells on the website. They'll show you everything as to what you have to do in order to get your original Serenium, and then you can start staking it. So anyways, guys, that's it for the video. I hope you guys found this interesting. Again, if you have any questions, feel free not only to reach out to the team who's working on the project, but along with that, leave comments down below. We'll hopefully get them to answer some of the questions, maybe some of the things that I might not be able to answer in the sense of kind of the games that they're developing at the moment, and some of the future ambitions for Serenium. In summary, I have to say there's a lot, in the sense that I'm curious about. I'm still eager to see. I think with the mass scale of partnerships that Serenium will have right off the bat with the gaming companies it's working with, it's going to have a huge boost up in starting to become a well-known cryptocurrency. But whether or not Serenium's token economics can work in the long term will have to be, tested over time. We'll have to see if this can work. And I'm interested if, the governance that's tied into it as well, which you guys can read up on a little bit, will be able to manage a fair interest rate in this case, as well as updates to the network if it decides to go on its own off the Ethereum network over time. So again, all kinds of interesting things. This is the ground, kind of ground zero for the project. It's just starting off. We'll have to see how Serenium does. All in all, though, it's not an ICO or an IEO. I wish it all the best of luck, and we'll see what happens over time. Best of luck to the Serenium team and the ecosystem. That being said, guys, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.